So first of all, we will discuss what was the issue yesterday. In fact, yesterday there was a issue regarding foreign exchange difference. Okay, so foreign exchange difference type of issue. So let us open the Excel sheet first, and what the system was expecting from us. Actually, today I was trying to clear a document, and that too I was trying to clear the document through the residual clearing method. Okay, if that same document I was clearing in the partial clearing process, then no such kinds of error message was there. But whenever I try to clear it through the residual payment method, that error was coming, and it could not allow me to post the document till the end. Actually, that was regarding the clearing process, say clearing of customer invoice. Okay, customer invoice, or I can say it that incoming payment and clearing. Okay, that was the process actually. So when there is any incoming payment and the document will be cleared, and it is in INR. The most important thing is that particular document was in INR. So INR means actually the invoice was in INR. Okay, invoice is in INR, as well as payment received is also INR. Okay, so in these two cases there should not come any kind of exchange rate differences. Okay, differences in exchange rate, gain or loss due to the difference in exchange rate, it should not be there. So therefore, in OBY6 is the global parameters, as you know. OBY6 is the global parameters. Whenever we complete all the basic customizations in FI before general ledger accounting, then always we follow the global parameters. And global parameters in OBY6, it shows us what are the basic things, what are the basic customizations we have done, like company code, your group company, chart of account, fiscal year variant, field status variant, posting period variant, these things as we have already done. So it automatically shown at one place, that is global parameters. In addition to that, in the global parameters, we always check proposed fiscal year, defined default value date, no forex rate difference when clearing in local currency. This is the most important thing. Normally, everybody select in the global parameters. What does it mean? It means there should not be any foreign exchange difference when we are clearing in local currency. So our local currency of my company code is INR. So I am going to clear the customer, or I am receiving the payment from customer in my local currency. So in this case, there should not arise any foreign exchange differences. So as per the SAP standard practice and SAP guideline, if we tick this, then it should not give me any kind of message regarding the foreign exchange difference. It is logically a proven fact. Okay, because in those cases there is no any foreign exchange involvement, timing difference in foreign exchange differences. In spite of that also, that error was coming, right? So when that error was coming, uh, I have to avoid that error. I have to make a turnaround solution to just bypass that error. That turnaround solution is not a wrong thing, but I have to do that. That thing is not actually required, but I was forced to do that. And after completion of this, then that error gone. So what is the thing what I have to do? Actually, that customization is required for the purpose of clearing in foreign exchange, but that thing was repeated in this case also. That is the most important thing or it is a unusual practice which I have to taken up. Only ticking off the same thing in the global parameter, it is enough. Those kinds of notifications or errors that should not come. But in spite of that also, so I was initially I was talking of that it is a kind of bug or like something else. So what I did actually to avoid that error. So let us go to the customization. In your case also it may come because we are in the same server. So one bug is there in this server means it will affect me and it will affect you also. So it is a very small customization, only one step, but that step, after that step, this kinds of things was no more. In this case, you have to go to the general ledger accounting new. In the general ledger accounting, there is a business transaction. Okay. Under the business transaction, there is a open item clearing. In the open item clearing, it is a customization path is there. Define accounts for exchange rate difference. Okay. You have to put your chart of account and click on enter. So in this screen, what I have to do? So many things are there, but basically, first of all, in your case, you have to click on the new entries button. In the new entries button, you have to you click on the new entries button. You have to give the GL account. What is the GL account? What you are going to put here? See, yesterday's class, I was trying to clear a customer by receiving the payment. So which account I was trying to clear? I was trying to clear the sundry debtor. So therefore, here the GL account of sundry debtor has to be there. Okay, in this first place. And second and third place, I have to put two numbers of GL account. If there is any exchange loss, I have to put the appropriate GL account. If there is any exchange gain, I have to put the appropriate GL account. That's it. You have to just save it. I'm just again showing you only these things you have to do. See, and currency type, I did not do anything. Okay, so simply I did it chart of account, sundry debtor GL, that is 2,08,000, and if there is any exchange loss, that is 400,201. So let us click on the drop down. Company code is 7200 because we had also covered the exchange loss, exchange gain related end user activities or customization previously. So therefore that GL was already there. So this is the two numbers of GL. One is your foreign exchange loss, this one 400,201. So I assigned this 400,201 here for loss, and for gain I assigned another GL which is regarding to 300, 100 here. Okay, that's it. Once I put this, save, then automatically that error was vanished yesterday. So let us do that. Actually there is no exchange rate gain or loss. So let us create one invoice first, FB70. I will try to post it, I will try to clear it through the residual clearing method. Okay, so click on the company code. I want to switch the company code 7200. Then I will find out the customer. So this is the customer, my old customer, Global Trading Limited. So I want to do it. So this is 12th January 2023. Suppose the amount is 2,50,000. Here is sales invoice posting, and GL account, that is sales account, 3 lakhs. So 3 lakhs is the sales account, and amount is star, and this is plus. Okay, then I will click on simulate, right? Then I click on post. Once I click on post, document number 9008 is posted now, right? So after 9008 is posted, let us try to clear it through the residual clearing process. So I will go to the accounts receivable, then document entry, then incoming payment. So this is the document date. Um, then I will come to the bank data. GL account of bank is 2 lakhs. Suppose 1,75,000 I am receiving. Okay. Then this is the narration, that is receipt payment from customer. Then I am coming to the customer account, that is 16. Then click on the process open item, right? So two numbers of items are now on the queue, but I want to make the residual clearing for only one item, right? So first item, so I will just clear here, double click here. Once I double click here, then this particular item was detached from the queue. So this is the only item which is on the queue, and it is, the font is changed. It is showing like red font. If your screen color will be different, then font color will be also different. But obviously this font is colorful font. So this font was also colorful, but once I click here, then it is converted into black. Black means now this is detached from the list queue for the purpose of clearing. So here the amount is 2,50,000. However, I want to clear only to the extent of 1,75,000. So what I will do, I will double click here. Once I will double click here, then 1,75,000, 2,50,000 minus 1,75,000. So the residual or rest of the balances 75,000 will propose, right? So how these things happen, just mind it. If we could go through the partial clear payment method, in that case something else would be there. So here that means part payment would be there. Part payment would appear here. But whenever we are in residual item tab, here the name of the tab is residual item. Okay. So if I click on the partial payment tab, how much it is showing? It is showing 1,75,000, right? This is the 1,75,000, which is the partial payment. But if the same thing I will do in residual payment tab, how much it is showing? It is showing as 2,50,000 minus 1,75,000, that is 75,000, which is the residual figure. Okay. So I will, in this particular screen, I want to clear. So therefore I will go to document and simulate. Okay. Once I go to the document and simulate, this journal entry is generated. Once this journal entry is generated, obviously it is a clearing in INR. So whenever it is a clearing in INR, there should not be any foreign exchange differences. Though this particular line item is automatically coming, right? Automatically coming, this line item. And here the amount is 0. So even if there is a timing differences, it should not have any impact because the invoice is in INR and payment received in INR. But in spite of my tick mark in the global parameter, it is forcing me to clear this line item having 0 amount. And this particular line item is also in blue font. So whenever this is in blue font, that means something is missing, right? But this kind of things, this line items which is automatically populated, in those cases, those GL accounts, it is a best practice, it is the standard recommendation that don't make anything as mandatory. Okay, that is required entry. Don't make anything as required entry. Why? Because if you make anything as required entry in the field status group and assign it to this GL account, what happened? Automatically it will disrupt our process, because a simple narration is enough, because these are 4 line items. If there is a narration in bank account, then automatically this is also applicable to foreign exchange gain account, which is the extra line item. But making you compulsion to put the narration can disrupt the system performance. Sometimes also that can create error if it is purely in a batch mode, right? Because we are entering in a single entry document, that means a single document we are clearing. But if somehow there is a batch process or background process or batch input session, then error may happen. Okay, so the best practice is I have to go and modify and replace that field status group in the GL account number 300 100. So that is the standard practice. So let us go to the FS00. So in the FS00, this is in navigation mode, right? Now that particular thing, it was coming as foreign exchange gain. So I am going here. So on the right side this is coming. Then I will click on the change, and after that I will go to create oblique bank oblique interest tab. Here I have given G001. So what happens? G001 is something where the text is mandatory. So what I will do? I will go to OBC4. Okay, I will go to the OBC4. Then I will go to my field status variant. Under this field status variant, I will select this one and click on field status group. Here G001 is already there. I will copy the G001. I will select G001 and click on copy as. Okay. Then I make it the name, say say Z001. Okay. Then I make it the text as 7200 all optional. So what is the meaning of all optional? All optional means there is no field mandatory. Actually Z001 is already there. So I can put Z720, say Z720. Okay. The naming convention should be different. So click on enter. Okay. Then I click on save. After I save, let us click on the Z720. Let us click on the general data. See, here the text is mandatory of this Z720. Now I make it optional. Then I just check, is there anything required? Click on the next. Again click on the next. Again click on the next. So nothing is required. Everything is either optional or some are suppressed. So that will not make any differences. Nothing is required. So there will no intervention in the practical posting of any entry. So now this Z720, I will use it for my purpose. I will just click on save. It is asking for save. So let us save it. Now I am coming here. Here for 300 100 Z001 was there. I don't want to change in G001 because G001 is assigned to almost all the GL accounts. But for auto posting GL account, I don't use that. So I will use it Z720, all optional. Then I click on save. Fine. So after I click on save, let us go to the transaction. Actually this transaction is already in the posting mode. So let us cancel this transaction. Fine. After cancellation, let us try to post again so that the system will automatically warm up. Automatically it will be synchronized by then. So this is my customer account. Click on the process open item. I want to detach this one. Click on the residual. Then this is residual item tab. Then click on the residual item. 75,000 it is proposing. Now amount entered, amount assigned is equal. Then click on the document simulate. Fine. So once I click on the document simulate, is that blue font available? No. Why it was not there? Blue font was not there. It is automatically converted into black font because I have assigned such a field status group where nothing is mandatory, nothing is required. Everything is either, most of the things are either optional or some of the things are suppressed for the purpose of screen variant. Okay, for the purpose of your screen requirement, field requirement. So now I can very well post the document, right? So this is how I posted the document. Okay, so in this case, suppose I was posting a document. Okay, I posted this document. Let us go through the open item management, FBL5N. So I was demonstrating the residual clearing method. So I have already told you that the residual clearing method is somehow different than the partial clearing. So how these things happen, let us see. Let the radio button be in the open item. Then click on the execute button. So once I click on the execute button, then what happens? I see 35,000 is there, 75,000 is there, two numbers of open item is there. But I go for the part payment, right? So what was the value of the invoice? The invoice value is 2,50,000. How much amount I paid? I paid only 1,75,000. But if it could have been passed through the partial clearing mode, then 2,50,000 along with 1,75,000, everything should be in there, showing in red, or everything should be in open item. Unless and until all the money is paid against the 2,50,000, that means even 1 rupee is outstanding for 2,50,000, then everything will be in red. But what happened in case of the residual clearing method? The original document is cleared. What is the original document? 2,50,000 is the original document. Let us see. Let us go to the clear item radio button and put the today's date, because today we clear. Click on execute. See what happened. Now the document DR was 2,50,000. So even if we receive 1,75,000, the original document is cleared. So once the original document is cleared, then we lost the connection. What connection we lost? That means any outsider will automatically think that this invoice is fully cleared. This particular invoice is fully cleared. But that is not true. We have cleared only extent of 1,75,000. So another 75,000 is still outstanding. But sometimes it will give a wrong message that 2,50,000 is totally cleared, right? So in spite of this, suppose I go to this particular document, right? So this is the document number 1009. I put the cursor here and click on this spectacle icon, and I will click on call up document overview. See how this document looks like. In this document, just forget about the foreign exchange gain. It is no more required. Here, the Global Trading Limited is cancelled. That means it is a Sunday debtor for 2,50,000. Now 2,50,000 is just the reverse is passed, as if entire invoice is cleared. But out of bank 1,75,000 goes out, and for 75,000 another line item is created as 75,000, and it is showing debit to the sundry debtor. So it is a misleading situation. So this kind of entry, actually we understand this entry, no doubt. The original 2,50,000 is cleared, but another 75,000 is pop up. It is created afresh. But if I go through the open item management report, this is misleading me. That means it gives an idea that this 2,50,000 is totally cleared, right? So that is the problem in case of your residual clearing method. So almost all the organizations, SAP has already have the both the facilities, but for the sake of clarity, organizations they prefer to use partial clearing method for their part payment. So they can make the link. There should not be any missing link. Even if 1 rupee is outstanding out of 2,50,000, then all the part payment in between against that 2,50,000, including 2,50,000, everything will be in red. Unless and until the final payment and total amount is cleared, everything will be in red. Okay. So that was the thing. Now we understood the difference between partial clearing method and residual clearing method, but let us discuss about that foreign currency transaction in this chapter also. See, I was passing the entries in INR, right? So whenever I was passing the entries in INR, no foreign currency gain or loss happens, right? But suppose I am making sales to a party which is there in a foreign country. That customer is there in a foreign country, right? So whenever that customer is there in the foreign country, what happens? Whenever I will sell the party, I will generate the invoice in the foreign currency. Let us take an example about your US. Suppose the customer is in US. So whenever the customer is in US, then what will happen? The entry passed will be sundry debtors debit, suppose 1,000 US dollar, 1,000 US dollar to sales, credit 1,000 US dollar. Okay, so definitely I have to pass the invoice as under. This should be the invoice. Suppose I pass this invoice on 1st April 2022, right? I pass this entry on 1st April 2022, and I received payment from this sundry debtors on say 1st August 2022, right? And whenever I received payment from this party will also pay me in dollar. So whenever this party will pay me in dollar, then what entry I will pass? That is bank debit, that is your 100 US dollar. Okay, and sundry debtors credit 1,000 US dollar, isn't it? So what happens? You will get the payment on 1st August 2022, though the invoice is raised on 1st April 2022. However, in this case, there can be any foreign exchange gain or loss. How these things will happen? How in SAP the transaction will be passed? See, this particular entry, the transaction currency, again I am telling, transaction currency is in US dollar. Okay, so in this particular both the transaction, what is the transaction currency? That means this entry is in US dollar. However, this particular entry has to be converted into my company code currency. That means this US dollar or USD has to be converted into INR. Okay, why it has to be converted into INR? If it will not be converted into INR, is there any problem? Yes, there is a problem. What is the problem? Because I know my company code is in INR. My company code currency is in INR. That means profit and loss account, profit and loss account and balance sheet is in INR. Okay. So when profit and loss account and balance sheet is in INR, then it is mandatory that all your transactions, whether the transaction currency is in US dollar or whether the transaction currency is in euro or Japanese yen, definitely it has to be converted into your company code currency. Otherwise, it cannot be a part of your profit and loss account and balance sheet, right? So whenever it will be converted into your INR, then what happens? There is a possibility of exchange gain or loss. Okay. So there is a possibility of exchange gain or loss, isn't it? So how this exchange gain or loss arises? Let us first take an example of the above figure. So what is the example I will take? Let on the date of passing the invoice, 1 US dollar is equal to 72 INR, right? 1 US dollar is equal to 72 INR. And whenever we receive the payment, in that date, payment also we have received from the customer. So in that date, suppose 1 USD is equal to 78 INR. Fine. So whenever 1 USD is 78 INR, in this case, the company is gaining. Okay. The company is gaining because this transaction, whenever it will be converted, naturally you know that all your transactions will be converted into INR in a real time scenario. So whenever this entry is passed in a real time scenario, this will be converted into INR 72,000 INR. Okay. This is also converted 72,000 INR, isn't it? Because your company code currency is in INR and your entry must be converted into INR for the purpose of your balance sheet and profit and loss account, right? So what is the sundry debtor appearing here in your company code? 72,000, isn't it? So whenever you are receiving the payment from the sundry debtor, that too, if it is converted into INR on that date, the amount is 78,000. So how the SAP will take care of the entry? Then the SAP will pass the entry as under bank debit 78,000. Okay. Then sundry bank account debited, then sundry debtors account credited. This one, sundry debtors account credited, that is 72,000, because sundry debtor is how much? 72. Then foreign exchange gain. So what is the gain here? The foreign exchange gain here, that is credit, that is 6,000. Okay. So this is the entry which is to be passed in your books of account, right? This is the entry which is to be passed in your books of account. So what is the benefit of this? This is also part of your accounting standard. Okay, this is also part of your accounting standard. Your accounting standard says if there is any difference in foreign currency comparing to your transaction date and realization date, the difference between the fluctuations in the foreign currency, it should be charged to the profit and loss account. through the your GL account, right? So normally every organization, they will be having two numbers of foreign exchange related gain or loss. One is foreign currency gain, another is foreign currency loss. But this particular entry will be automatic. It will be always automatic. Okay. So let us demonstrate. Before demonstration, I have to just do the customization again. So what is the customization required? The same thing actually. The same thing, but just there is some identification of the US dollar. I will go to the general ledger accounting. Then I will go to the business transactions. I will go to the open item clearing. I will go to the define account for exchange rate. It will ask me my chart of account. I will put my chart of account, click on continue. Okay, this is my sundry debtor, right? So once this is my sundry debtor, foreign exchange loss is this one, foreign exchange gain is this one, but there is a most important thing is missing here. I have not specified any currency. So I will specify the currency here, that is US dollar. So I will click on copy as. Once I click on copy as, I will put here US dollar. Okay, that's it. Click on enter and click on save. So this customization tells the system that whenever any amount is received from this sundry debtor against this sundry debtor GL, and that is in US dollar, then if there is any foreign exchange gain or loss, automatically for the loss, charge to 400 201. If there is a gain, charge to 300 100. So what is the purpose of this customization? The purpose of this customization is, if there is any exchange gain realized, then charge it to 300 100, that is foreign exchange gain account, and if there is a loss, charge it to 400 201. The basic condition is the transaction must be in US dollar and it should involve the sundry debtor GL, that is 2,08,000, right? So this is the customization which is required. Then I will do something at one place, another place, OBS 7. So OBS 7, whenever I receive the money, the document type is DZ. So in the document type DZ, always populate exchange rate type M. I have already discussed about the different exchange rate type, right? So M is the average rate. Okay, so this average rate will be used. Now let us go to the foreign exchange table OB08. So let us see the foreign exchange table. We know how to see the foreign exchange table and how to update the rate. We know it very well. So I will go to the position button. Here the exchange rate type M, from currency US dollar to currency INR. Okay. So see, these are the exchange rate update which is available in the table. Actually it should be updated on every day. So from US dollar to INR, these are the rates, right? See, this, suppose the transaction is passed on 1st April. Actually, what is my example? My example is the transaction is on 1st April. So as for the foreign exchange table, what is the exchange rate of 1 US dollar to INR? 1 US dollar is equal to 72 INR, right? Then in the second case, what is the realization date? That means what is the date when I received the money from the customer? It is 1st August. Let us come to the foreign exchange table. So in the 1st August means, see, this is 31st August. 31st August, this is the update. So for 1st August, which rate is applicable? The latest rate on August, that is 31st July, 79 rupees is updated. So automatically for the transaction up to 29th August, it will pick up the rate 79. Again I am telling, see, somebody has updated the foreign exchange table on 31st August. Okay, as well as somebody has updated the table on 30 August. But my realization date is 1st August. See, this is the 1st August. So whenever this is realized on 1st August, what is the rate the system will pick up? The system will pick up this rate, because this is the latest rate, because there is a long gap. So this is 1 US dollar is equal to 79 INR. So definitely my system will calculate the difference between 72 and 79. So 1 US dollar, 7 rupees is the gain. So 100 US dollar or 1000 US dollar means your 1000 into 7, that is 7000 rupees is the exchange gain in this case, right? So how these things will happen in the SAP system of accounts receivable, let us see it. So updating the foreign currency table and everything, you know it very well, I don't have to do it again. Let us go to and pass a transaction in foreign currency FB70. Okay, so I am putting the customer number. Suppose invoice date is 1st April 2022, right? This is 1st April 2022, and amount is say 1000 rupees. Amount is 1000, not rupees. I have to change it to USD, US dollar, right? Then this is purchase, sales invoice posting, and this is your sales account, that is 3 lakhs. Amount is star, then your text is plus, then I will go to the document. Don't care for the warning message, because this is a backdated posting, the things are adjusted in the background, right? So this is 1000 US dollar. The document currency or the transaction currency, document currency or the transaction currency, both things are same. So my transaction currency or document currency is in US dollar, and click on save. Okay, I save this document. Let us come back FB03. This is document number 9009. Click on enter. So once I click on enter, this is showing me the entry view, right? So what is the entry view? The entry view is 1000 US dollar. Suppose I want to see the display currency. I want to see the local currency. Local currency means my company code currency. So what is the local currency? The local currency is 72,000. How the local currency is found out? Let us go to the exchange rate table OB08. The system is automatically picking off from the exchange rate table regarding taking into consideration the exchange rate type at that time, as well as the exchange rate, that is USD to INR. Fine. So my transaction is on 1st April 2022. So 1 US dollar is 72 rupees at that time. So that's why my SAP document is automatically picking off 72 into 1000, that is INR 72,000, right? So now suppose the same document is cleared on 1st August. So what I will do? I will go to the accounts receivable, I will go to the document entry, then I will come to the incoming payment. I am putting the date 1st August 2022, right? This is 1st August 2022. Bank data I am putting 2 lakhs. Then here I have to change the currency, because the party is going to pay me 1000 US dollar. The party is in US. So as per the invoice, the party is paying me 1000 US dollar. So received payment from the customer. This is 16. Click on the process open item. Click on enter, right? So this is my 1000 US dollar. So this is amount entered, this is amount assigned. click on document and simulate. Okay, once I click on document and simulate, this transaction is shown like this. As the document is in US dollar, so there is no exchange gain or loss here. But if this is converted into INR, then foreign exchange gain will be something else, because the invoice is in US dollar, payment is coming in US dollar. But here in the transaction currency or document currency, no foreign exchange gain will be shown. See, here the rate of exchange increased 79 rupees. So straightforward, that is a 7 rupees gain. But is there gain in US dollar? No, US dollar is US dollar. So if I want to see the entry in INR, then the impact will be in the INR automatically by the SAP system. How I will see it? First of all, I have to save this document, right? This document is saved. Once this document is saved, let us go to and see the document both in foreign currency as well as in INR. See, this is the entry view in US dollar. Nothing is changed. But if I go to click on the display currency, select the local currency, click on the continue, how the entry is showing here? The entry is automatically the entry in the background passed as under bank account debited 79,000. This is the entry I was showing to you. This is the entry I was showing to you, na? So whenever the payment is received in US dollar, there is no exchange rate gain or loss in terms of US dollar. But if I know that this entry has to be real time converted into my company code currency or local currency. So whenever this entry is converted into local currency, then system post this foreign exchange gain 7,000 rupees and clearing the Global Trading Corporation 72,000 INR, right? So how these things happens? How automatically these things happens? This things happens automatically due to the customization. What is the customization? This is the customization I have done. Very simple customization. But the unfortunate thing is, even if I am going to pay in doing the transaction in INR also, that customization has to be done. But it is not expected to be. This is not expected that this customization is required for INR also, local currency also, because in OBY6 the same thing is already selected. So there are two times customization. This is for my unfortunate INR transaction, though there is nothing impact of exchange rate. This has to be done, but important thing is this is omitted. Currency is omitted. This is not required. But second time I have to do the same thing using the currency US dollar, right? So that's why, due to this particular customization, the transaction is looks like this. The transaction is looks like this. It automatically pick up the gain 3,100,000 GL, and the differential it is automatically throwing here, right? So this is the way, through this by this customization. Out of this customization, my point is, if you will be having any kind of that message, you can very well avoid that message by doing this customization, as well as you can also use euro, INR or yen, any kind of transactions. You can use that customization path, as well as you can pass the transaction in foreign currency and receive the payment in foreign currency and update the rate in the SAP table. And you can also find out how, picking the rate from the table, it is automatically creating the extra line item of exchange gain or exchange loss with the differential of the foreign exchange, and how the entry is generated automatically. Okay, So this is the intention of the discussions. Okay, fine. So this is regarding your foreign exchange transactions, which is associated with your accounts receivable. Customer export, you are exporting something and you are getting from a foreign party in US dollar. Now I will go to the next discussion. Next topic is dunning. So this is also a very important topic. The name of this topic is dunning. So what is the meaning of dunning? Dunning means a systematic reminder. Systematic reminder. Okay. Dunning is nothing but a systematic reminder. Whom to remind? We are in the chapter accounts receivable, right? We are in the chapter accounts receivable. In the account receivable, we are dealing with customers, and you know all the customers do not behave in a uniform manner. Some customers, in spite of their credit period is over, some customer do not pay in time. You have to, therefore, you have to remind the customer by way of a notice mentioning the amount outstanding or the amount receivable. So whenever we are discussing about amount receivable from customer, it is not a single amount, because you are selling the customer through different invoices in different time periods. Suppose you have sold to customers by way of 30 invoices. Out of these 30 invoices, say the customer has paid 20 numbers of invoices. However, 10 numbers of invoices is still outstanding. So whenever you will issue a reminder, that reminder should be automatically mention each and every invoice number, amount, date of those 10 numbers of invoices, as well as there should be a standard script. What is the standard script? Script means what will be described in the reminder. So there should be a standard script requesting the party to clear the dues. So these reminders are in different levels. So what is different levels? Suppose the company code or the organization declares that we will go for the 4-time reminders: first, second, third, fourth, and every reminder to another reminder there is a gap of 10 days. So first reminder, the language is very soft, it is just like a request. Second reminder, third and fourth reminder, the language is somehow somehow the language will be in a nature of threaten, or in a nature of ultimatum to be given to the customer to pay, and it may be having mentioning that if you do not pay finally in the fourth reminder, then we will go for the court of law for recovering our dues. So the script of the reminder is entirely depending on the company code, right? Entirely depending upon the organization, and this script will be designed by the ABAPers. But we are not the ABAPers, or we are not the technical consultants or technical persons. So whatever script is there in the SAP system by default, that script will be used for our letter or reminder or our dunning. So in the dunning there are some few terms you have to understand. One is your dunning area. So what is the meaning of dunning area? Dunning area means your organization may be having a centralized dunning area. That means from the head office all the notices are issued. But suppose your organization is very big one and it is scattered over pan India. So in this case you can also create n numbers of dunning areas on the basis of your marketing offices, because marketing people, they are concerned with order booking and customer relationship. So the reminder and everything, they should do that. So instead of a big organization, instead of centralized dunning, there can be many dunning areas in different marketing offices, and person in charge will be there to issue the dunning notices, right? And there is another term is called dunning label. 1 2 3 4, there can be maximum 9 labels. In SAP, certification questions are there. In the standard SAP, how many dunning labels are there? 9 labels are there. You can issue 9 numbers of reminders, but normally the organizations use 3 or 4 maximum. After that, they can go to the court of law for recovery of their dues, receivables. So that is another term, dunning labels. So dunning area and dunning label, these are the terms which are used, and we will directly go to the customization, and we will see how we will customize the dunning procedure and how we are generating the dunning notices with the predefined script, how it is soft reminder, how it is hard, how it is a final ultimatum, or like that. Let us go to and do the customization one by one. So the first customization, we are going to the SAP reference IMG, then we are going to the financial accounting new, then we are going to the accounts receivable and accounts payable, then we are going to the business transactions, then we are coming to the dunning, then we are coming to the dunning procedure, basic settings for dunning, and click on define dunning area and click on the new entities button. What is the name of our company code? 7200. I am making the dunning area blank. Blank means, why I am keeping it blank? Because I decided that I will make the dunning from a central place or corporate office. In this case, I don't have to create any area. So there is a single dunning, single area. I don't have to make any definition or identification of dunning area. So keep it blank. Now 7200 dunning area, just I am writing. For the description will tell me, it is giving me some message, don't care for this message, and click on save, right? So this is the first thing. It is also again giving me reminder, don't care for the reminder. And see, these organization, they have how many dunning area? 0 1 0 2, like this. Domestic vendor, foreign vendor. See, you can create dunning area on the basis of types of vendors, types of customers. It is showing as vendors actually. Normally dunning is followed in case of customers. Let us see. These are so many things in relating to customers it is created, but vendors it is created, but it has to be actually from the customers point of view. It must be created from the customer point of view, because all these dunnings and everything, we go for the customer, we do it for customers. In spite of that also, it is by default it is created previously for vendors. So let us come back, and dunning area is completed. So I make it blank intentionally because I want to do the centralized dunning procedure. Then I will go to the dunning procedure customization. So second one, then click on define dunning procedure, right? So these are already procedures which are already created. Now I will click on new procedure. Once I click on new procedure, I will give it the name 7200 dunning procedure. Okay. Then time interval in days, I will keep 10 days. What does it mean? This is also one understanding. First dunning notice to second dunning notice, there must be a gap. It is not that immediately we will make the dunning notice and issue the notice to the customer today, tomorrow, day after tomorrow, like that. No, it will not be like that. We will give some time, 5 days or 10 days or like that. So I have decided that in my organization, one notice to another notice, there must be a gap of 10 days. for my customer. Dunning label, it can be maximum 9, but I am using 4 labels here. Okay, so 4 labels is also sufficient. Most of the organizations, they can follow the three stages. Then line item grace period 3, what does it mean? You know, if a particular if there is any due date, the after that due date 3 days of grace is given. In commercial parlance, 3 numbers of days of grace is given, which is added to the final due date. So I also put here line item grace period 3 days. Okay, so that much thing is there. Then select I will select standard transaction dunning checkbox, and I will click on save. Don't care for the warning message, click on enter. Again click on enter. uh, okay, again click on enter. Don't care for the warning message. Then I will click on dunning text checkbox. It is asking me the company code. I will put 7200. Right now, after dunning text, and I will give the company code SIL, then click on enter. uh, okay, so I always click on the company code. I select the company code, and I also select the radio button, and I click on the continue. Right, so now I will click on my maintain dunning data for company code 7200 first. Okay, so I will click on new company code, click on continue. Okay, 7200 is coming automatically. I will select dunning by dunning area and separate notice per dunning area, separate notice per dunning label, and click on save. Again click on save, save in your request. Okay, now after this dunning text, then I will come to another area, that is your I will come to another area which is called dunning labels. Right, so there are 4 labels initially I decided. So automatically it is showing 3 days, 13 days, 23 days, 33 days. What does it mean? That means when the amount is actually due, after that 3 days of grace, first notice will be issued, and there is a gap of 10 days between one notice to another notice. So 3 plus 10 13, then 10 23, then 10 is added, that is 33. Right, then click on always done checkboxes. Okay, now after clicking on the always done checkboxes, then I click on dunning text. Text means that script, and click on continue. So it is asking me the script, that means the notice, what will be the language of notice, it is asking me. So what will be my language of notice? I don't know what is the language of notice, what is the script used. I will use the predefined script. For that purpose I will create another session. I don't know the script, I will find out the script from itself, that means from the SAP itself. So let us open another session from where I will copy the text or script. I am going to the financial accounting new, general ledger accounting new, business transactions, then open item clearing. Sorry. I will go to the accounts receivable and accounts payable. Then I will go to the business transactions. Sorry, again there is a problem here. Business transactions. Then okay, just a minute. I will go to the business transactions. I will go to the dunning. Then I will go to the dunning settings. No, I will not go to here. I will go to dunning procedure. Click on this. See, the first procedure 0001. Okay, this is a standard procedure. I will just double click here and I will click on the Dunning text. Here I will put the company code name 0001, again 0001. That is a standard company code. See what is the scripts appearing here. These are the scripts: first level, second level, third level, fourth level, and I will use this standard script. So let us copy the script, right? Let us copy the script and come back here, paste the script here, again here, again here, again here. But this has to be changed to 2. Actually this is predefined scripts. See what is the script. Again I am showing you what are the scripts I have copied. See, the first 2 are same, third and fourth are same. So there are 4 labels: 1, 2, 3, 4. 4 notices will be issued. So there are 4 scripts. So here I will write 1, 2, 3 and 4, right? So this is the thing what I will do. Then I will click on charges button. What is the charges? If some organizations, whenever they will issue a notice, the stationery and other expenses for the reminder notice, that is also intimated to the customer that you have to pay my dues along with the charges. So let us decide the charges. The charges can be a percentage of the amount due or it is a fixed sum. Suppose I have put a fixed sum 100 rupees because that is my stationery expenses to remind that party. So I put 100 rupees here as Dunning charges. It can be also percentage on the amount. I don't prefer to have percentage. I have fixed 100 rupees charges. Then I am coming back and click on save. Okay. Now it is saying no minimum amounts have been entered yet. So what is the meaning of this? Suppose a customer, a small customer, 1000 rupees is outstanding. Some organizations, they don't prefer to remind the customer. In that case, the customer, it is a very small sum. If you want to get that money and go to the court of law, then you have to incur huge amount for recovery of that 1000 rupees. So legal charges and legal cost is also very expensive. You cannot afford to have the legal expenses for 1000 rupees outstanding or 1000 received receivable. So you have to set a minimum amount. That means in a notice you should specify that for 4 numbers of Dunning, 1, 2, 3, 4, the minimum amount should be say 1000, more than 1000, at least 1000 or more. So any receivable or sundry debtor of 1000 or more, notice will be issued. Less than 1000, no notice will be issued. So I put here and click on save. Okay. So this is the completeness of my Dunning procedure with all the formalities. Now it is time to link this Dunning procedure with my customer master. So change the customer master using the transaction code FD02. So this is my customer, Global Trading. So click on continue. Now click on the company code data area and click on correspondence. Why correspondence? Because Dunning is nothing. It is a correspondence only. It is a letter. So here I will assign my Dunning procedure. Whatever Dunning procedure I have prepared now, customizations I have done, I assign it to 7200. I assign it to my customer. Okay. If you will be having number of customers, you will also link all individual customers this Dunning procedure and click on save in your request. After that, let us pass one entry FB70, right? So I am passing one entry first. Suppose that entry is a backdated entry, 1st April 2022. It is very old entry. Let us have say 1st December 2022, right? 1st December 2022. Okay, then amount is say 65. This is sales invoice posting. This is 3 lakhs. Amount is star. Text is plus. Let us see, is there anything? No, it is nothing. Click on simulate. Don't care for the warning message. Click on simulate. After simulating, let us again click on OK. So this is nothing, no payment terms is there, so it is cash sell. So come back and click on save. Right, so document is saved. Let us have another document. Suppose that the document is 1st November 2022. Okay, 1st November 2022. Suppose this is say 85,000. This is sales invoice posting. This is my sales. This is star. This is text. Simulate. Enter. Then click on save. Right. So after saving, let us generate the notice. For generating the notice, I will go to the accounting, financial accounting, accounts receivable. This dunning notice or notice generation is always periodical. That means every 10 or 15 days, as per the company policy, this notice is generated and issued to the customer by hard copy or through the mail process. The transaction code is F150. Okay, so put today's date. Today we are generating the notice, 12th January 2023, and let us have the identification 7200. Okay, 7200A. Then click on the parameter tab. Then dunning date, today's date, that is 12th January 2023. Document posted up to 12th January 2023. Company code 7200. Then which customer we have to see? This is from customer to customer. There can be thousands of customers to whom at a time notice will be generated. No issues at all. I have only one customer, so I am putting 16. These are the parameters. Click on save. Then come to the status. Here it will be shown parameters were maintained. Then click on the schedule button. Automatically output device or printer information will be there. In SAP software there is a virtual printer. That name of virtual printer is LP01 always. In your case also it is LP01. Just put the virtual printer name LP01 and click on continue. Click on start immediately. Click on schedule and click on enter. Just put on enter 2-3 times. Once you put the enter 2-3 times, it will say one dunning notice is generated, of which one are to be sent. So dunning notice is now generated. Let us click on the dunning printout. Here also you have to put the virtual printer name LP01. Actually, if there is a real printer, you can have the real printer name, or there is a virtual printer in SAP server. The name of that printer is LP01. Click on continue. This is start immediately by default. If it is not start immediately, you can just click on the print. Again click on 2-3 times, enter. Okay. So now the dunning printout is also complete. Actual printer is not connected. Now I have to see the notice. Then for that purpose, I have to click on dunning history. I will select the account type D. D means customer. Company code 7200. The customer name 16. I can also make it blank. If I make it blank, all customers notice will be there. But in my case, only one customer. I am giving the customer number. Click on execute. Once I click on execute, it will show me the first notice is generated having 1,50,000. I will put the cursor here on the first run. What is the first run? I have told you that there are 4 dunning labels, right? So this is the first label. I put the cursor here. click on the display dunning notice. Okay, then I click on print preview. I will put LP01 and click on continue. See, this is the notice which is generated. I am in the print preview. What is the name of the party? Global Trading Limited. And this is the first dunning notice which is generated on 12th January. Okay. It is written as, Dear Sir or Madam, the invoices listed below are due for payment. If you have paid the amounts due in the intervening period, please disregard this letter. What is the meaning of intervening period? Suppose today I am issuing a notice. I am generating a notice and making the posting through the postal service. I send this notice. Maybe 2-3 days it will take, or 7 days it will take to reach. If within that period the customer paid, then I have to mention that if you have paid the amount due in the intervening period, please disregard this letter. So here there are two numbers of invoices which is passed. One is 85, another is 65, and fixed dunning charges 100 rupees is also mentioned here. So the total amount is 1,50,100. But mind it, this dunning charges 100, there is no accounting document. But these two are accounting document. This is the document number 9010, this is 9091. This is just a mention because I have already customized that a fixed charges will be there. If the customer will pay 1,50,100, then actual posting I will do dunning charges, that is our income 100 rupees, so that everything will be nullified. Okay, so this is the first label of the dunning notice which is generated. Okay, let us go for the second label. Second label, we know it is after 10 days. So after 10 days means today is 12th, so on 22nd January there will be another label. So identification, anything up to your identification, up to just identify, click on enter. So 22nd January I will put the parameter. So documents posted up to 22nd January 2023, 22nd January 2023, company code is 7200, customer is 16, click on save, and again click on the status tab. So parameters were maintained, click on schedule, LP01 is the standard printer, click on continue, always select start immediately, click on schedule, again click on enter, 2-3 times enter. Once you put the 2-3 times enter, the system will refresh. Here it is shown as 2 numbers of dunning notices generated. Click on the dunning printout, click on LP01, click on continue. Mind it, it should be start immediately. Click on print, again enter 2-3 times so that the system is refreshed. Then click on the dunning history. Account type is D means customer, company code is 7200, customer is 16, click on the execute. Once I click on execute, then second label notice is generated. In addition to the second label notice, another notice is generated for my previous invoices. What is previous invoices? Because there are so many previous invoices before which was also outstanding before this dunning customization. So those invoices, no dunning notice is generated. So now first dunning notice is generated for those pending invoices which are already passed in the SAP system before this dunning customization. And this 1,50,000 first notice is already gone and second notice is there. Okay, so I put the cursor on the second notice, click on the display dunning notice, click on the print preview, select LP01, click on continue. So this is the second dunning notice. So second dunning notice, the script is changed. What is the script? Dear sir or madam, we have already sent you a reminder about the due date of our invoices. We have, however, so far been unable to find any record of incoming payment for these invoices. Please transfer these overdue amounts immediately. If this dunning letter once again fails to elicit any action on your part, we will unfortunately have no option but to calculate interest on arrears. Okay, so it is a threaten that if you do not pay, then we will calculate interest on your outstanding amount. So what is the amount? 85 plus 65, 100 rupees is the postage charges we are adding. So this is the notice. So this is the second level. Suppose in spite of the second level, that particular party did not put anything. So in this case, let us generate another notice on 2nd February 2023 and put it as 7200C. Click on the parameters, document posted. See, we are not making any new document, so today's date is also sufficient, because within today's date and 2nd February no new documents are there, so no new documents is going to be added, so it is enough. So now click on save, click on the status, parameters are maintained, click on schedule LP01, click on continue, always make start immediately, then click on schedule, click on enter. Actually the time is not there, I think. So this is 31st, so it should be on the very next day. Actually notice is not generated, 3rd February 2023. Okay, so this should be there at least, because the time is not due. Dunning date, okay, dunning date has to be the same date, it should not be a back date, so that was the problem actually. So 3rd February 2023, company code 7200, this is 16, click on save, then click on status, parameters maintained, schedule LP01, continue, it should be always start immediately, click on schedule. Okay, now two numbers notice are generated, click on the dunning printout, again LP01, click on the continue, start immediately, print, click on enter, then click on the dunning history, here the account type D, then 7200, customer 16, click on execute. So this is the third notice. So put the cursor on the third notice, click on the dunning notice, click on the print preview LP01, click on continue. Okay, so this is the notice. So this notice, the language is also different as per the standard script, and there is also a final notice, which is the notice number 4. You can also test here at your system. Okay, so this is the way through which the dunning happens. So for this week, this is the last class. Wishing you that you will do the practice. I will send the video. So good night to all of you, and I am ending the session.